The advice you need to hear is that a fund costs 50 grand up front to start. A fund of funds is the greatest hack of all time. A fund of funds, let's say the SubTo Fund, you've got Ted as the head of fund, you've got Brittany and her sidekick are investor relations. Okay, that's 2 full-time people raising capital. Think about that, 2 full-time people raising capital, that's all they do. Then you've got Brittany, another Brittany that does the operations, and she does like the websites, the communication, she is the glue between all of these pieces. Then you've got Ryan, who is our head of acquisition, and he has a junior acquisition underneath him. Then we've got our asset manager. So how many people is that? That's 7 people. That's what a fund looks like. And people are like, oh, let me go launch a fund. I'm like, you're gonna launch some cracker jack one solo person in their little like home office, that's your fund? And you're gonna go ask accredited investors to give you $100, $200, $300,000 checks? That's what you're gonna go do, is launch a fund? The cost of a fund, here's the cost of a fund. 50 grand up front minimum. Like, you're not starting a fund for less than 50,000 bucks. And people watching this right now, somebody that started a fund is gonna go, oh, that's not true. I could do it for way less. Yeah, you could do it for way less because you've done it before. People forget that stuff. When you do your first fix and flip, you get your ass handed to you. When you do your 50th fix and flip, you're like, yeah, I'm really great at managing contractors. I know where to find the right stuff. I know what to do in the right order. I know what kind of deals to do. So when somebody brand new is like, well, how do I start a flip? You can't give them advice based on the person that's done 50 flips. You have to give them advice based on the person they are today. So if you've never done a fund today, ever before, the advice you need to hear is that a fund costs 50 grand up front to start. Okay, so think about this. If you go get an education from somebody how to start a fund, that's $30,000 education, then the actual cost is minimum $50,000. Then you're gonna have people on your team minimum $10,000 a month. So now you got $120,000 allocation of payroll for your first year of a fund. It's $200,000 to start a fund and be educated on it. 200 grand. Prove me wrong. A fund of funds is the greatest hack of all time, because like 4 years ago, I'm sitting there going, I want to start a fund. And I want to launch something where our community, it's not obviously not my community, it's our community. Our community can all invest on these badass properties together, like this 160 unit deal. I'm like, let me pave the way and go find seller finance, 160 unit badass properties that we get for like 3 and 4% interest in an environment where everybody else is running away. Let me give an opportunity to everybody else by showing people how good we are at doing what we do. Okay, great. So we get to inspire people is first and foremost. But now I have a team of 7 people that if you decide I want to start a fund today, you don't have to start a fund and spend $200,000. What you do is you go, Pace already has 7 team members, and I already believe in the mission. Why don't I just go do a fund of funds where the only thing I have to do is bring my circle of influence, bring my people to the table, and all I do is learn how to raise capital, which is actually the most important part of this. I learn how to raise capital, and the focus of my fund is to invest in SubTo Fund, which is something I'm already a part of anyway. So a fund of funds means you get equity, you get cash flow, you get depreciation, you get ownership of the asset just by bringing people to the asset, if that makes sense. And you didn't have to worry about acquisition. Ryan did. You didn't have to pay Ryan's payroll. I did. You didn't have to find the deal, negotiate the deal, follow up on the deal, and know that it was a good deal in the first place. You don't have to worry about, oh my gosh, I'm gonna go to my uncle's brother who has $100,000 and I'm gonna ask him to put $100,000 into a deal that I'm not 100% sure it's a good deal in the first place. That's what people are so afraid of starting a fund, is that a fund is like, I'm gonna go raise money to put other people's money in a deal that I found. Look at all the plates you're spinning. You're juggling so many things. So a fund of funds allows you to leverage me or leverage the SubTo Fund, which you're already partners of. And you go, that's my fund. The SubTo Fund is my fund. I'm going to create my own like SubTo Fund underneath it that raises money for the SubTo Fund. So when somebody gives you $100,000, that allows you to put that $100,000 into the SubTo Fund, and you get paid to do that for raising capital. Okay, usually about 3%. Okay, you'll also get paid equity in the deal. So even though you didn't have to actually put any money into the fund, your fund allows you to leverage into the fund and get equity for doing so. So when I first started 4 years ago, thinking, I mean, I'd already owned hundreds of properties and had a big portfolio. I was like, I want to build something for our community to do something together. Okay, I was like, I don't know how to do a fund. This was 4 years ago, not that long ago. So I'm sitting there doing research and research and research, and I paid for education. I paid about $200,000 in education in multifamily, and I hadn't done a multifamily deal. I was just trying to figure out what are the creative ways to get into a deal and who's doing creative things. And I run into this grandma, an older grandma at a seminar, and I was like, what do you do? And she's like, my focus is fund to funds. I'm like, what's a fund to funds? She says, well, I just find other operators that I really like a Grant Cardone, a Brandon Turner, a Vina Jetty, a Pace Morby, a this. And I just go to them and go, how much are you raising? They go, well, we're raising 10 million. And I say, is it cool if I just raise $1 million of your 10 million? You raise 9, I'll raise $1 million, and I get equity in your deal by raising that $1 million for the fund? And people say, yes, 100% of the time. And so she's like, I've made a career out of just doing that. I get paid up front for raising the money, and I get equity in the deal. I didn't have to find the deal, manage the deal, exit the deal. I didn't have to pay for the payroll. I didn't have to have an office. I didn't have to do all of that stuff, but I get to leverage all of the credibility of whatever fund I'm raising money for. So she says, so if I go raise money for Brandon Turner, I get to say Brandon Turner is my partner because he actually is my partner. I get to say I am a partner in the SubTo Fund because I actually am. Now, what's the cost to start a fund of funds? What would you say your guess is, Jordan? What would it cost?
10, 20 grand.
$5,000. Costs $5,000. What's the cost? The cost is when I go start the SubTo Fund, I create a document called a PPM, a private placement memorandum. It's a document that's this thick, and it's written by a securities attorney, and it's a document that tells my investors, my prospective investors, every which way they could lose their money. It is a legal requirement to give every investor in a fund or a syndication a PPM to read and sign before they give you money. If you don't give them that document, it's called securities violation, that's fraud, and you'll go to prison. It's a federal offense. Okay, the SEC comes in and puts a lot of people in prison for securities violations. So one of the biggest securities violations is taking people's money before or without giving them a PPM. Angela, I've never given you a PPM. Are you an investor in the SubTo Fund?
Yes.
Okay, so you have seen the PPM. Okay, anybody that's invested in the SubTo Fund has done and signed a PPM. Okay. That document costs $30,000 to $40,000 depending on what attorney you go with. If I've already created that document for the fund, then you guys, if you decide I want to do a fund to funds, which we're going to teach this in SubTo Fund next quarter, all you do is you go to that same attorney and you go, will you take that document and just clean it up, change the names, do the this, do the that, and make that applicable to my fund. So it's the same document, but it has different structure on it. And so the cost is not 40 grand for you, it's 5 grand because the attorney's taking the same document and editing it and saying, this fund, Jordan's fund, is our thesis, right? Our belief in what we tell our investors we're doing. It's called a thesis. Our thesis is investing in the SubTo Fund. That's what we do. We invest in the SubTo Fund. Coolest thing about a fund of funds is the lack of cost, lack of overhead. You get a massive education by actually being part of a fund. There's no better education in multifamily. There's no better education in managing assets. There's no better education in acquisition. There's no better education in asset management or disposition and positioning the asset for a potential exit. No better education than being in a fund of funds. So like everybody that's out there teaching multifamily should stop teaching multifamily. They should stop teaching funds. They should only teach to brand new people fund of funds. Why? Because it's more applicable to a new person. right? You learn on the job at no cost, right? You spend $5,000 to get the documents, and then you go and raise money from your own friends and family. And then from that point forward, you can say, yeah, I'm a partner on these 200 unit deals. Okay, that's all dope. Really, really, really cool. The second coolest thing about this, when your investor puts $100,000 in your fund, you get paid for that. You also get equity in the deal, right? As you leverage that money into the fund, right? The money comes into you, then that money goes into the fund dollar for dollar, but you get paid, we pay you to raise that capital. It's all legal to do that, by the way. Your investor gets the same ownership, whether they give us the 100,000 or they give you the 100,000. So there's no detriment at all to your investor investing with you directly versus investing with me directly, which is insane. And so the third coolest thing is that now your investor not only has the fund, the head fund, the SubTo Fund, as the fiduciary, right? The responsible party that's watching over their money and really being a steward of their investment. But then they have the extra layer of you and the extra layer of your communication and the extra layer of your white glove service of loving on them. And guess who does not communicate with your investor directly? Us, unless you tell us to. You directly communicate. So you take the newsletter and the videos that we send to you guys. You then take the communication I'm giving to you, you change it to Angela Wayne's fund, and you send it to your investors. The SubTo Fund does all the work, carries all the cost, has all the credibility, has all the momentum, has all the risk. Why would you ever start a fund in your first 2 or 3 launches? You wouldn't. It does not make any logical sense that somebody other than a very high level, ultra connected, very financially well-off person would ever start a fund as their first launch. You would only do a fund of funds as your first, maybe your first 4 or 5 launches until you're like, I get this now. This is what happened. I paid $200,000 in education. It was worth the $200,000, but I'm not looking for something where I put $200,000 in and I get $200,000 of value back. I'm looking for something that I put $200,000 in and I get $2 million back. You know what's funny is that grandma was the turning point for me, and I started talking about fund to funds on YouTube and started telling everybody in multifamily, like, you guys are wasting your audience's time. The failure rate of people starting a fund is like 99% failure rate. What's the success rate of a fund to funds? 99% success rate. It is literally the opposite, because you're not having to worry about, well, who do I hire first and where does that money come from and how do I find the right asset for my investors and how do I make sure that the contractors are doing their job and I have a 9-to-5 job, because a lot of people starting their fund for the first time or have a 9-to-5 job or other responsibilities. How are you going to manage the contractors? How are you going to find the next asset? How are you going to deploy or communicate with brokers for more pipeline deals? It's physically impossible to do a fund as your first launch, unless you're like a person that's like, yeah, I'm a Harvard grad, I'm ultra connected, I can make 2 phone calls, raise $20 million, and I also can stomach the burden of the payroll of what an actual fund looks like. You guys know how big Brandon Turner's fund is? He has 36 employees. Wow. What would you rather do? Would you rather go start your own fund or go, hey, Brandon Turner, let me go raise $1 million for you so I can see every little thing behind the scenes. Those team members, those 5, 32, 16, whatever team members that fund has, become your team members. They work for you now. That's how that relationship works. And so there's what a fund of funds is. Anybody want to start their own fund right now?
No, sir. I'll start my own fund of fund.
There you go. So you start your own fund of funds and you do it 2 or 3 times. You do it 2 or 3 times, right? As we go and buy another asset, we buy another asset. Now, how does this benefit me?
Helps you raise capital.
It helped kind of, right? So like it takes a little bit of the burden off. Typically when I see people doing a fund of funds, the fund, that main fund will raise 90% of the money. Yeah. The fund of funds, like even if you have 5 or 6 fund of funds, they won't even equate to 10% of the money. How does this actually benefit me? So forget about the capital raising. That does benefit us to a certain degree. One, it satisfies my soul. I love watching people take the thing that took me 4 years and it takes them 4 months. I love that. That's great. Gives me that emotional income. But financially, how am I driven to make you guys all successful by launching your own fund of funds? Here's what happens in 3 years. In my vision, I can see things in 4D. I can see exactly how things happen. Here's what happens. Angela Wayne starts her own fund in 4 years. Her fund goes and finds an asset and she goes, I need to raise $10 million for this, but I'm not equipped to raise 10 million. I'm equipped to raise 5 million. She can come back to the SubTo Fund and we can become co-GPs. We can be actual partners side by side on the org chart partners. And so essentially what I'm creating is I'm creating an army of people going out and finding more deals that I can collaborate with them on at a higher level than a fund to fund structure. And it's me planting seeds for a 4-year harvest. And in 4 years, whoever comes along, could be Larry, could be Jordan, could be whoever, they go, all right, I've got all my momentum. I now can rely on Pace to go, I'm gonna go find my own stuff with my own acquisition team, but I now wanna go back to Pace and go, I wanna be co-GP, okay? And I'll raise 5 million, you raise 5 million, we're actual side-by-side partners in that deal. A fund of fund is, you're the fund of funds, I'm the fund, so I'm in charge. I run everything, right? You get all the credibility, you get all the overlap, you get all of that stuff, which is great, but at some point you should be my equal, you should be my co-GP.
Got it.
And then at some point, you then are out on your own. 100% out on your own. Then what are you doing? You then are turning around and teaching other people in the community 5, 6, 7 years down the road how to do a fund of funds with you. And so there's the equation. And what's tough is I just laid out an 8-year plan. Most people can't wait 8 years psychologically, they just can't be patient. So they think the cheat code is, let me just go do the fund right now, I'll just skip the line. All right, great. Have fun losing all your investors' money and being stressed out at night. I'm not gonna put myself in a position where I wasn't smart by leveraging other smarter people than me. And every day I wake up, I meet 15 people a day that are smarter than me at whatever. And so I'm just patient in my game. That's it. You know? So, fund to funds. Hopefully you learned something. If you sell multifamily education, I'm sorry, I just did this video on YouTube. So sorry. I'll see you in the next one.